So you're looking to buy a property before you sell another property. So what do you do? In this case, you may need a bridge loan, but what is a bridge loan and who actually offers bridge loans?
Money, 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 hard money, Mike. Money for real estate investing. Let's make money, 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 money. HardMoneyMike.com.
Hi everyone, it's Mike Bond with Hard Money Mike, and today we're going to talk about bridge loans. What is a bridge loan? Sometimes you hear it as a fix and flip loan, sometimes you hear it as a BRRRR loan, but a true bridge loan is when you take one property, maybe you're just getting done with a flip and you want to buy another flip, and you need the equity from your flip that you're about to get rid of to buy the next property. So it's really a loan that is a temporary loan where you use both properties to buy the new property. But it really comes down to one thing. It's bridging a gap. It's a short-term loan when you're using multiple properties to buy another property. So how does a bridge loan work? So like I said, typically it is a loan where you already own a property. So maybe, like I said, you already own a fix and flip and you want to buy another property. Maybe it's a rental or it's another flip, but you need the equity out of the property you're selling or about to sell to buy the new one. So what a lender will do is they'll put a lien on both properties, and when the one property sells, your bridge loan will be paid off, and then your equity will be transferred now to your new property. So when you're looking at a bridge loan, it is typically a short-term stopgap loan that just bridges you from one property to the next property. And like I said, sometimes some lenders will call a fix and flip loan a bridge loan just because it's a short loan, but typically a bridge loan is just gapping you from one property to the next property, and that way you could keep your business going, keep your product going, all those kind of things. So when you're looking for a bridge loan, you're going to have to look for a bridge loan lender. And so who are the bridge loan lenders? Who actually will lend you this kind of money? That's what we're going to go through next. So your number one bridge loan lender is probably going to be your typical small community banks, maybe credit unions. Now, some hard money lenders like us will do bridge loans, short-term transactional funding, but most lenders are not going to be into the bridge loan. So you're going to have to actually look into Google, talk to your banks, talk to your credit unions, even talk to your hard money lenders. Typically, if it's going to be a hard money lender, it's going to be a local lender. It's not going to be your large lenders. There's also institutional money out there, kind of like your Athos and some of your big mortgage companies will actually lend on a bridge kind of function, and they'll even do non-owner and owner occupied. So if you're looking out there, you need to make sure you find a lender that will do bridge lending. Most lenders won't. It's probably only 5 or 10% that will actually do this. So call your local banks, call your credit unions, and call your local hard money lenders to find out who's actually lending in your area for bridge loans. And you also want to find someone who's going to be able to do it quickly, because typically the only reason you're going to do a bridge loan is an opportunity came up that you just cannot pass up. So you want to make sure you grab that property. So you're going to have to find that lender who will do it quick. And that's why I always suggest maybe looking at that local hard money lender to help you buy that property. So bridge loans for real estate investors, who uses them, where would you use them, and why would you need to use them? Typically, like I've stated before, is you've come across a deal you just cannot give up, you don't want to pass on, so you want to grab that property, but you're already working on another property, or maybe you just have equity in a property, a rental, a commercial, or even your own home, and you want to be able to close on that other property quick. So a bridge lender, sometimes called a gap lender, will actually lend you the money. So typically in the real estate world, you're buying one flip and you want to jump into your next one that's just too good of a deal. So you want to jump into that. So you're going to use a bridge loan to take the equity out of the property you're working on now to buy the new one. But it also could be where you're buying a property and you don't have another flip. Maybe you have your own personal property or a rental property that has a ton of equity in it, and you want to buy that next property and it's just a great deal. And you could use maybe your owner-occupied home or maybe your other rental to actually use as extra equity to do a quick purchase of that new property and then maybe refinance it later. So bridge loans are based on something that someone's going to lend you that money. You're going to buy a property, and typically in real estate investing, you're only going to buy a property that's a great deal. So you're going to buy that property, get that deal, and either sell the other property to pay it off or refinance the new property, get a new mortgage, get a new loan on there, and it'll release the liens on both properties. So you may hear that, fix and flip or BRRRR loans are also called bridge loans, and I guess that's each to their own. It's just kind of how they want to market it and stuff. But typically a bridge loan is not a fix and flip, it's not a hard money loan, or it's not a BRRRR loan or anything else like that. Typically the bridge loans are you're just moving from having a piece or a real estate that has equity in it, maybe that flip, maybe another rental property or commercial property, whatever it is, maybe some land, and you want to buy something and you want to buy it quick, and you just need a short-term loan until you can either get everything fixed and settled for your refinance of that new property. So you might have found some land you want to buy and you want to redevelop it, or you may have found that flip, or your neighbor wants to sell you a property that has great rental potential, but they want to close quick because they want to move out. You can't set everything up on the traditional side. You can't set everything up even on the hard money side. So what a bridge loan typically is, it'll bridge you into either that hard money loan for the flip, maybe a longer term loan with your traditional lender or bank that can actually help you secure that property, get that property so you get that under market property at the price you want, and then you could get into selling something, refinancing something, getting it to the point of where you want it to be. But a bridge loan is there just so you can take advantage of an under market valued property. So how much does a bridge loan cost? So typically a bridge loan, like we've talked about, is for short term, somewhere typically between weeks and maybe 3 or 4 months. So it's a very short term loan. So what you're going to find are rates are somewhere, especially in the hard money side, is somewhere between a point and point and a half. Even on banks, because they want longer term kind of rates or loans, most small banks are going to charge you somewhere between a point and a point and a half for origination. They may have some appraisals and stuff also on there, but interest rates as far as banks will be a little bit higher too, because it's a short term. If they're charging 5, they may charge 6 on a bridge loan. For hard money, typically the rates don't change. So if you're paying 8, 9, or 10 for hard money, those rates are the same, but you're probably going to find somewhere between a point and a half and 2 points for the cost, the origination on something like that. Most hard money lenders, you're going to avoid the appraisal. You're going to avoid some of those other costs with it. So you may want to look at that. But I always look at it like this: the cost should outweigh, your opportunity. Like we had a client who had the chance to buy a property, and he was one of 5 bidders. He got the property, and he got a $30,000 less than anybody else because he's able to close quick. So bridge loans come in handy. Typically, they'll pay for themselves because you're getting something under market. So even though it might cost you somewhere between a point and 2 points, it may cost you somewhere between 6 and 10%, you got to put that into the equation of, is this property a great value, and will it add a lot more than the cost of the money? So where do you use a bridge loan? In the current market, we're sitting here June of 2022. We see people buying or using bridge loans when they have a property, when they're, right now it's overbidding on everything. It's starting to slow down a little bit. So where do they use it? It's kind of what I've gone through, but it's when they have an opportunity that's out there. Their neighbor selling a house, or a house maybe was on the MLS, they had a buyer, they need to sell quickly, and here comes an opportunity for you. You're working on that flip, you're almost done, and an opportunity comes up. So in this hot market, you have to be able to move quickly and to close quickly. So if you're able to not only put something under contract, but tell them you're going to close in 5 to 10 days without the appraisal, without all the other issues that come up that will slow something down, that'll make a realtor maybe take a second look to the better for you, because you're maybe competing against people who want to close in 30, maybe 60 days. You have to have a benefit. You have to have something that outweighs, that puts you on top of that list, and that's where bridge loans comes up. You could bridge the equity you have, quickly close, and then get into either the hard money loan for the flip or just a traditional loan if it's a rental. So in this market, you have to be able to move quick, act quick, and be able to really close quick, because if you're not, then you're going to lose out to your competition. So if you have some more questions, just reach out to me, Mike at Hard Money Mike. We also have a free download, Lending Options, kind of goes through some of the lending that real estate investors can use, look for. And always check out our channel. We have a lot of great videos there. We have a couple more on bridge lending. Subscribe, share, like, and as always, happy investing.